Porsche Taycans continue to drop as we're approaching 2025. The depreciation counter increased rapidly and sits currently at a loss of more than 46% compared to May 2022. The whole EV market is currently depreciating at elevated rates compared to their ICE counterparts, but this cannot go on forever. Or can it? Taycans can now be found for $50,000 to $55,000. How much cheaper can they possibly get? In this video we'll figure out the latest developments in the depreciation rate and check if the premature signs of flattening that we saw 6 months ago continued. Let's start with the high-level trends for the base and the S models. Over here we can see the median prices since April 2021. Prices held up fairly well till mid-2022, but then came crashing down. S's are down by 46%, or $58.4 thousand, and for the base models this is 40.2% or $42.2 thousand. Absolutely crazy numbers. It shows though that the depreciation in the S market is slightly higher, but this is something that we see across the Porsche lineup. Tracking the price development till now, we can see that the rate is not really flattening, only that the gap between the two models decreases. During last year, base models lost 21.8% or $17.5 thousand, and for the S's this is 25.3% or $23.2 thousand. Again, enormous amounts. There's a caveat though, but more about that soon. First we'll have a look at the turbo and GTS market. The price pattern though is very similar to the one in the base and S market. Values are plummeting. GTS's are down 43.5% or $76,000 from their market top. For turbos this is 48.8% or $77,000, and for turbo S's 46.7% or $84.9 thousand. Again, these are extortionate rates, especially if you own the car on a private registration. Now the end of this seems far away. Prices are falling linearly. GTS's are down by 26.2%, turbo S's by 20.4%, and normal turbos by 28%. It goes without saying that these are some of the quickest depreciating models that feature on the channel. The Turbo S though seems to stick out. We'll soon dive into that number. Speaking about the Turbo S, you can see that prices are on par with the GTS, but this is simply because the GTS's are, on average, a lot newer. So can this go on forever? Will they depreciate by more than 20% up until the point that you can basically pick them up for free? Of course not. There will be a point that even Taycans start to flatten, and we might be approaching that point. Over here we have the yearly depreciation rates that we just saw and the ones of February. This reveals that the average depreciation rate is still extremely high, at 24.3%. Values continue to collapse. However, it's marginally lower than the 24.9% of February. As you can see, this is driven by the Turbo S, Base and S market. Base models went from 22.3 to 21.8 and S's from 28 to 25.3%. And yes, these numbers are higher than for an equivalent Panamera. They typically lose less than 20% per year. Have a look at the latest Panamera market update to find out more. There's a problem though. These numbers are averages. Sometimes they can accurately represent what's going on in the market. But in this case, it's difficult to get a clear picture by looking at these numbers only. We need to go one level deeper to see what's actually going on. Splitting the base market by model year, we can see that the depreciation curves for the 2021 and 2022 cars start to flatten. Depreciation was the highest from the end of 2022 till the end of 2024. In the beginning of 2024 though, the trend started to flatten slightly. 2021 cars lost 20% during last year, slightly less than the average of 21.8%. 2022 cars still fell in line with the average and only flattened in the last 6 months. Now we can see this minor flattening patterns for other models as well. Switching to the S's, we can see that 2020 and 2021 cars depreciated slightly less during the last 12 months than the 12 months prior to that. The difference is small, but it's there. I think you get the point, right? The same applies to the 2020 and 2021 turbos. We can see a clear flattening, especially in the 2020 market. Even the oldest Turbo S's started to depreciate slower. There's a clear break at the end of 2023. So based on the price trends, the worst is behind us in terms of depreciation.
and this is confirmed by the market inventory data.
Over here we can see the development in the carried over inventory, that is, the percentage of cars that aren't sold within 3 months. If this number is increasing, it means that cars are selling slower, and this typically means higher depreciation rates. Looking at the development of the carried over inventory, we can see that it basically increased up until the summer of 2023, and then decreased and somewhat stabilized. It matches with the price behavior that we saw before, and is an indication that the market is more balanced than before. Moreover, rates between 25 and 30% are similar to other markets, meaning that 25 to 30% of the cars that are for sale were also for sale 3 months ago.
So sellers managed to get rid of them relatively quickly, but it comes at a cost. They need to discount them by 7 to 8% if they don't sell for their original asking price.
If we look at the price changes for unsold cars, we can see that sellers were a bit optimistic when these things hit the market and quickly realized that discounts are required. February 2022 was the low point. The average discount rate was 9%. For some unsold assets, the average was even higher at minus 11%. However, since then, discount rates decreased. The trend has been up, and currently the average discount rate for unsold cars sits at minus 7%. On a standalone basis, this number is still on the high side, but the upward trend, again, confirms that the worst depreciation in the Taycan market might be behind us.
Let's wrap up.
Taycans are still depreciating at insane rates, and some cars lost almost 50% since May 2022. Yet, after this long period of crazy declines, we can see that the oldest ones started to depreciate marginally slower.
The market is balancing out a bit, something that we also saw in the inventory data.
But the Taycan is of course not everyone's cup of tea.
Personally, I think they look cool, but I would probably never buy one for other than taxation reasons. But I'm sure that there are plenty of you out there who simply like the Taycan and have been waiting to pick up a great value for money example.
If you belong to this group, the upcoming year could be the first decent moment for your purchase, as long as you do it with your eyes wide open. Naturally, even the oldest Taycans will still depreciate, and you should expect to lose a substantial percentage on your car. But the data indicates that it will be less than what we've seen so far, and more in line with normal depreciation rates for high-value luxury cars.
Something to keep in mind though is the warranty period. Some of them are known to have some issues.
The general warranty is 4 years or 50,000 miles, but this excludes the battery. For the battery it's now 100,000 miles or 8 years. So this means that the normal warranty for a 2020 model is soon expiring. So you might want to get an extended warranty pack. Now when it comes to the battery, you could get close to the 100,000 miles limitation or the 8 years period. But to use the warranty between year 3 and 8, the battery needs to have a capacity of 70% or less. I couldn't find any extended warranty packs for the battery, but please let me know in the comments if there exists such an option.
And with that we arrived at the end of the video. Now if you enjoy this data-driven way of analyzing car prices, but would like to see a video for a different car, head over to my channel. Over there you'll find data-driven market updates for a large variety of cars. Can't find the car you're looking for? Let me know the name of the car by commenting it down below in the comment section. Once there are enough requests for a certain car, I'll make a video about it. As always, thank you for watching, and I hope to see you again in 2 weeks for a fresh market update.